Warren Ingram has a can of petrol, has a box of matches. Go.
So, okay, great. Thank you. So
I'm having no part of this.
Okay.
All right.
I want to contrast the news coverage around the fires in Amazon with a lot of the opinion pieces that we get in South Africa about the prospects of South Africa, and to put them in exactly the same category. So, are there fires in the Amazon? Yes. Are there fires in the Amazon every single year in dry season? Yes. Are they twice as bad as they were last year or the year before? No. In fact, they're probably quite a bit lower in terms of the quantum of fires and the scale of fires than they were 10 years ago. And we need to give this thing around the fires a context. There's no context at the moment to the reporting around this. And I'm quite wary of consuming American news because I think, we've seen now that it's opinion driven as opposed to fact driven. And I think on both sides of the debate. So one of the things that I'll do is when I'm looking at international news, I'll consume BBC. Because I think, that's okay.
The BBC has been one of the biggest culprits about the fires in Brazil.
Exactly. And that's what's, so I started reading the BBC and thinking, jeepers, the Amazon's really, it's outrageous. And then I saw that same, or a video by that same academic that you spoke to yesterday. And there is a man with no agenda. It's not as if he's working for the Brazilian government or, the current president. He predates this president. And he's been in South Africa, in fact, talking to our farmers. He's a well-respected global person and saying, he doesn't understand why the hype is now going about this. It's a very specific timing question. And then I did a bit more work on this. And you, for example, you can go to NASA. NASA tracks these things. You can actually go there yourself and go and have a look at the quantum of fires over time. And objectively, this is an issue, no question. But is it a bigger issue than it has been for the last 5 years? No. And then we look at South Africa. And I mean, if I look at opinion pieces by international wealth management firms that will say you should not have money in South Africa. The economy in South Africa is declining at a rapid rate. We're definitely going to be downgraded, etc. Then I go and read up how these international wealth management firms are licensed in South Africa. And interesting thing, they're not licensed to do business on South African assets.
So they are basically talking their own book, is your point.
And then we look at some South African talking heads that are opening up offices all around the world and not in South Africa. They're not expanding in South Africa, but they're expanding on South Africans going overseas. And they sell real estate in Mauritius and they open up offices in London and the like. My question there is, when you see this stuff and you're the consumer of this news and there are things to be worried about, no question.
I mean, last week you were quite emotional about NHI, for example.
Exactly. And we need to give it a context to say, okay, because even in that show, towards the end saying, don't now, because I'm emotional about this, go and cash in all your chips and get out. Give it a context, understand what's going on. And I think that's the point is even the well-respected media houses are getting suckered in sometimes by what's going on and just repeating stuff because it's a news cycle. We've got to have constant flow of news and, whatever the BBC is doing. I mean, I don't think that we can accuse them in this instance of in-depth journalism here. No. This is repeating stuff that's being rehashed elsewhere. And the same in South Africa about the prospects of the country. Those pieces that you were talking about earlier around the prospects of South Africa, by someone like JP Landman, who's been in this country a heck of a long time, analyzing what's going on. That's an important piece because he doesn't have an axe to grind. In fact, it would get him more news if he was more negative because we're predisposed as human beings to deal with negative. We like the negative news. That's what we get excited about. So for someone like that to talk about those kind of things in a positive tone, and he doesn't work for a big corporate, he doesn't have an agenda there that works for him. He's giving you his view. I mean, you could argue that, someone like Adrian Gore might have an agenda because, it helps him to get.
He doesn't want all his medical aid members emigrating.
Yeah, you can argue that. So, but at the same time, he does use to an extent objective facts. Is he selective in how he reports them? Sure, you can argue that. But I think we just need to be really careful about how things how we consume our information at the moment.
Okay, so lots of information, lots of it contradictory, most of it negative. How the hell am I meant to create an investment path when I'm too scared to look at my Twitter feed in the morning.
Okay, so that's probably a good start, is to say just be really careful of consuming long-term investment information on your Twitter feed, because that's really not going to help you. I think Twitter is great for giving you news flow that's really instantaneous and completely unanalyzed. That's what it's good for. But it might alert you to an issue to say this is something you should investigate more. That's what I would do. And that's the interesting thing. You bring up Twitter, and it's one that I think is partly responsible for people making terrible investment decisions. So I think the first point to understand is volatile markets. In other words, where the South African stock market or the international markets, where they fall by 5 or 10% at a time, that becomes quite unsettling for people right around the world. South Africa is no different. What's important to know, just as a start around volatility, markets tend to fall by 10% in a year. It doesn't mean that they fall from the 1st of January to the 31st of December, that they fall by 10% in total. But in a year, in a calendar year, markets will often fall by 10%.
That's called volatility.
That's called volatility.
Yes.
And what we will read in the headlines is blood on the streets. That's what we'll read. And, pack your bags, get out of here, move to cash, go overseas, buy a property, whatever. This time the world's going to end. And so just to note that when you see those kinds of headlines, understand volatility is probably presenting you with an opportunity, if you've got cash that needs to be invested, with a nice time to do that, because the volatility represents a time to buy. And I think that's
didn't I'm sure there was a group of very optimistic Zimbabweans and a group of very optimistic Venezuelans who might have felt exactly the same thing, as there was a slow burn at play and then a quick burn at play in their economies.
Sure. And so that doesn't mean that you put all your money into your one basket, right? So thanks, because now you lead me on to my next point.
Oh, yes. Okay.
So I like that. Thank you. Is be careful here of being too definitive in your views. In other words, if you think that this is the next Zimbabwe, that doesn't mean that you should take all of your money out, because very often we are great at being wrong, all of us as investors. So if you've got a very strong conviction, let's just turn it on its head, and you say that that I believe the Adrian Gore story. I believe that this is a great time to buy in South Africa, and NHI is going to be resolved well. Tito Mboweni, his plan is going to be implemented perfectly, exactly as was written. That doesn't mean that you invest every cent of your money in South Africa in 5 small companies that you think are really going to treble in value overnight. The trick there is spread your eggs across many different baskets. So make sure you've got exposure to the South African market, even if you believe that the South African market isn't necessarily going to do well. If this is where you're going to spend your money, you need to have an exposure here. Then you should have overseas investments as well. And you should have money in cash, you should have some money in bonds, you should have some money in property and in shares. So that diversification argument is really what I'm leading into here, is when you don't know what's going on, and most of the time, most of us don't know what's going on.
Correct.
Then make sure you've spread your assets across as many different types of asset types as there are, without buying Bitcoin and believing that that's now the thing that's going to save all your troubles or solve all your problems. It's not. But if you're going to take a punt on Bitcoin, do it with money you can absolutely afford to lose. And for me, that would be the money that I would have spent on maybe going out on my monthly dinner with my wife. But that's about it, because I'm prepared to lose that money completely. But
and your wife.
Well, no, I can't say that.
Okay, just checking.
No.
Now, Warren, help me out here as well, because again, it is at times of great disconnect and mistrust and fear that human nature says, give up. Human nature says, you know what? They say markets are for the long term, and Warren always says on the radio, 5 years. 5 years is the least amount of time you should consider investing for. And if we go back in South Africa 5 years, there's not very much to say about having invested in South Africa versus had you invested at a slightly stronger currency 5 years ago in the S&P 500 at much lower levels than it is today. I mean, you probably have twice as much money as you done that 5 years ago. And that's when this thing about perseverance versus stupidity comes in.
Yeah. So just to understand two things. One, your large fortunes are made over long periods of time. They're just not made over a short period of time. And I think, so two things. One is about this South African climate right now. Perseverance is critical there, because when markets do turn, remember the JSE could turn overnight, literally tonight. It could turn quite sharply upwards if Donald Trump, while he's sitting on the loo, which is apparently where he does all his tweets from, where he tweets about, we've resolved the trade war with China. Tomorrow, the rand will strengthen and the JSE will go up. And if you've been sitting on the sidelines waiting, what's happened? Things have turned against you. So just be really careful there, because you need to be in the investment business and you need to be constantly invested over long periods of time to allow your money to grow on itself and to keep accumulating. The people that have made small fortunes are those that just lost patience. The people that have made large fortunes have persevered, but with diversification. That's the trick here. I'm not saying now, the great examples of Apple, for example, people buying Apple shares, soon after Steve Jobs rejoined Apple and just had nothing else except Apple shares. Yes, they did incredibly well. No, that wasn't a great idea.
Don't you wish you'd put all your money into Capitec or into Naspers or into Apple on the day they launched?
Yeah, because then your opposite argument kicks in. You could have had it all in Enron, and it could have all fallen apart on you. So I think the point is be patient. Or
Steinhoff.
Yeah, exactly. Yeah, African Bank. You could persevere, but then be spread across a range of asset types.
Warren Ingram from Galileo Capital.